Abercrombie & Fitch reported a comparable sales increase at its namesake brand. It was up 4%. And you could say, well, look, they cycled an 11% decline last year in the second quarter. But if you look at the 3-year stacked figure, that was up 32%, 32.5% to be precise, is the 3-year stacked increase. And they still delivered a 4% increase. So that was really encouraging. And when you look at the total sales, because of course they're expanding, and with some wholesale opportunities, their total sales were up 8% for the brand. Hollister, this is their Gen Z brand, that was down 4% in the quarter. And analysts were looking for sales to be down less than 1%, but they were cycling a 19% comp increase a year ago. And so really what kind of overrode that is the fact that the name brand, the namesake brand did really well, and the fact that we're seeing improving trends in the third quarter so far, starting off strong for both brands. So we could see the Hollister brand also return to positive comps. But their overall sales for Hollister were up 2%.
It's kind of remarkable when you go into an Abercrombie & Fitch now how different it is from its heyday in the 90s. I mean, for one thing, the music is not like so loud that you can't hear anything, and it's a lot brighter, and it's catered to women a lot more than it ever used to be. And of course, that might reflect the sensibilities and the strategic decisions of the CEO, Fran Horowitz, as opposed to Mike Jeffries, who was, really put his stamp on the company. But Mary, just talk to us a little bit about the dependence on young women, or maybe not even young women, millennial women, as the key audience for the clothes now.
Yeah, so Scarlett, you really hit on it, and that is that, going back to the 90s when it was really more of a high school, college student, now it's really, we're talking about millennials. So those think about customers in their 30s and 40s. That's really where Abercrombie & Fitch is going after, and and it resonates. And not only is it that consumer in terms of the age demographic, but from an income demographic perspective, they tend to be higher earning. So that's in the $100,000 to $200,000 household income range. So that's really how that brand has shifted, just to your point. And also, they're really looking to have more of a balanced business, like half and half men versus women. And you'll see that in the stores. It's divided straight in half, men on one side, women on the other side in terms of assortments.
Promotions, how promotional were they in the quarter, and kind of what are you hearing from some of the other retailers?
Yes, Paul, so you're bringing up a good point. They were actually able to do more full price business in the quarter, so that helped them on the margin side. Within the Abercrombie brand, this is distinct and different from the story that we're talking about here with Abercrombie. If you talk about Kohl's delivered another comp sales decline, and this follows 3-year stacked sales declines in the double digits. So Kohl's is still struggling to make a comeback. We did see some encouraging signs when we walked the stores more recently. We're seeing much better merchandising. The store is starting to look more cohesive. But we also saw that it's a lot more promotional right now. That should benefit them in the third quarter, and they might be able to inch closer to break even. But nonetheless, it just goes to show you that off-price, I think, is really making a dent in that business, and why you're continuing to see declines there, despite the improvements, that they're seeking to make. And if you look at Sephora, which has been about a $2 billion business, their comp sales were down 4%. So here was a business that initially was showing strength, and that's a business that draws repeat customers.
Right.
But again, still seeing weakness there as they try to, improve the assortments there, bringing in a lot more newness.
Sure.
It just goes to show you there's still a lot more to go there at Kohl's, and of course they're catering to a lower to middle income consumer, talking about a K-shaped difference there.